Imagine paying $1.83 billion for something and then selling it for $3 billion just 17 years later. That's a 64% profit, right? Not bad. Now, imagine that someone else pocketed the entire profit. Someone else collects every toll. Someone else keeps collecting tolls for 82 more years, and all you get is a measly $25 million transfer tax. This is the story of the Chicago Skyway, how one mayor's brilliant deal became a century-long money machine for foreign investors, and why Chicago drivers are still paying the price. Act 1, the crisis. Spring 2005, Chicago is broke. The city faces a $220 million budget hole, and Mayor Richard M. Daley, son of the legendary political boss, needs money fast. Raising taxes? Political suicide. So Daley looks up, literally, at the Chicago Skyway, a 7.8-mile elevated toll road built in 1958 to connect Chicago to Indiana. It's not pretty, it's not glamorous, but it is profitable. In 2004, 17.4 million vehicles crossed the Skyway, generating $39.7 million in tolls. The $2 toll hadn't changed much since 1993, and this was Chicago's golden goose. But Daley needed the eggs now, not later. Daley had been watching the privatization trend sweep across America. Roads, airports, water systems, everything was on the table. But no American city had ever privatized an existing toll road. Chicago was about to be the first. Act 2, the bidding war. March 2004, Chicago issues a request for qualifications. 10 companies respond, 5 are selected to bid, and the city expects competitive offers, but nothing prepares them for what's coming. October 2004, bid opening day. The second highest bidder offers $700.5 million. The lowest offers $505 million. Not bad money for a 99-year lease. Then comes the Sintra-Macquarie Consortium. Their bid? $1.83 billion. Nearly $1 billion more than the next highest bid. City officials are stunned. Budget Director John Harris will later say, "We weren't going to let anyone steal it from us. The other bids were not serious." Act 3, the players. So who exactly bought Chicago's highway? Meet Sintra, a Spanish infrastructure giant owned by Ferrovial, and Macquarie, Australia's largest investment bank. Together, they formed SKYWAY Concession Company. Sintra, based in Madrid, specializes in toll roads across Europe, South America, and North America. Ferrovial's portfolio includes airports, highways, and major construction projects worldwide. Macquarie, headquartered in Sydney, is known as the Millionaire Factory for its aggressive infrastructure investments. They see opportunity where others see risk. These aren't small players. By 2005, Sintra and Macquarie had a combined assets worth hundreds of billions. They weren't just buying Chicago's highway, they were buying Chicago's future. Act 4, the celebration. October 28, 2004, Chicago City Council votes unanimously to approve the deal. The mood is euphoric. Alderman Richard Mel gushes to Mayor Daley, "If you ever decide to change careers, there's truly a place in Las Vegas for you. You have been able to pull off not a rabbit out of a hat, you've been able to pull a $1.8 billion gorilla out of a hat." The Chicago Tribune calls it a brilliant political move to obtain much-needed cash. Moody's, S&P, Fitch all raised Chicago's credit rating. For the first time in 25 years, Chicago has a AAA rating. Here's where the money goes. $463 million to pay off Skyway debt. $134 million to pay down other city debt. $258 million to eliminate short-term obligations. $500 million in a long-term reserve. $375 million into a midterm annuity. And $100 million for neighborhood programs. Act 5, the toll hikes. January 26, 2005, the Skyway officially transfers to private hands. Immediately, the toll jumps from $2 to $2.50, the first increase in 12 years. But that's just the beginning. The contract allows steady increases. 2008, $3. 2011, $3.50. 2013, $4. 2015, $4.50. 2017, $5. And after 2017, annual increases based on inflation. Today, the toll is $5.90 for cars, nearly triple what it was before privatization. For trucks, it can be over $20. Higher tolls mean fewer cars. Traffic dropped from 48,422 vehicles daily in 2005 to 41,249 in 2013, a 17% decline. But higher prices offset the volume loss. Act 6, the financial reality. Here's what the investors don't advertise. They were hemorrhaging money. To buy the Skyway, Sintra and Macquarie borrowed $1.4 billion. Their interest payments alone were $23.4 million annually. Between 2005 and 2014, the Skyway concession company only turned a profit in 1 year, 2013. They were collecting $80.7 million in revenue by 2014, but debt service was killing them. Meanwhile, Chicago was burning through its windfall. By 2011, nearly $500 million of the Skyway money had been spent on day-to-day operations. The long-term reserve slowly being tapped. Compare this to Indiana, which used its $3.85 billion from selling the Indiana Toll Road to fund a decade-long infrastructure plan, building 104 new roads. Chicago balanced budgets and filled potholes. Act 7, the fire sale. June 2015, just 10 years into the 99-year deal, Sintra and Macquarie put the Skyway up for sale. They won it out. The same companies that paid $1.83 billion are looking to cash out. The auction attracts major players. The winning bid, a consortium of Canadian pension funds, the Canada Pension Plan Investment Board, Ontario Municipal Employees Retirement System, and Ontario Teachers Pension Plan. The sale price, $2.8 billion. That's $1 billion more than Chicago received just 10 years earlier. The Canadians are buying the same highway for 53% more than Chicago sold it for. Chicago's share of the windfall? A measly $28 million in transfer taxes. That's it. The foreign investors pocket $1 billion profit while Chicago gets table scraps. Act 8, the second flip. Fast forward to 2022. The Canadian pension funds have now owned the Skyway for 7 years. Guess what they do? They sell it again. The buyer? Atlas Arteria, an Australian toll road company. The price? $2.014 billion for a 2/3 stake. This values the entire Skyway at $3 billion. Let's do the math. 2005, Chicago sells it for $1.83 billion. In 2015, it sold again for $2.8 billion, 53% more. In 2022, it's valued at $3 billion, an increase of 7%. Chicago's cut from this latest sale? Another $25 million in transfer taxes. The city has now collected $53 million total from 2 resales, while private investors have flipped the asset for billions. Act 9, the long game. But here's the twist. The 99-year lease doesn't end until 2104. We're only 17 years in. Every single toll collected for the next 82 years goes to private investors. Dana Levinson, Chicago's former CFO who engineered the original deal, defends it. Based on the equity value of $3 billion, when it comes back to the city in 2104, it'll be worth north of $15 billion. But that's not adjusting for inflation. In inflation-adjusted dollars, that $15 billion might be worth less than the $1.83 billion Chicago got in 2005. Remember, every year, tens of millions in toll revenues flow to foreign investors. By 2104, they'll have collected potentially billions more than they ever paid, all from the piece of infrastructure built by American taxpayers in 1958. Act 10, the bigger picture. The Skyway was just the beginning. After this success, Daley privatized 4 downtown parking garages for $563 million, the entire parking meter system for $1.15 billion, nearly signed away Midway Airport, $2.5 billion. In total, Daley's Great Chicago Sell-Off brought in over $3.5 billion in upfront cash, but at what long-term cost? Today, Chicago faces a $1 billion budget shortfall. The mayor talks again about having no revenue-generating assets left to sell. Well, no kidding. They were all sold decades ago. Act 11, the reckoning. So was the Skyway deal smart or stupid? Answer is complicated. It depends on your time frame. Short term, brilliant. Chicago got $1.83 billion when it desperately needed money. Credit ratings improved. Debt was paid down. Crisis averted. Long term, catastrophic. The city sold a perpetual money machine for a one-time payment. Over 99 years, the Skyway could generate tens of billions of dollars in revenue. Other cities learned from Chicago's experience. When they privatized assets, they demanded shorter terms, more control, and revenue-sharing agreements. Chicago was the cautionary tale. Act 12, the lessons. Attorney Clint Krisloff, who tracks privatization deals, estimates Chicago's assets have already cost the city about $5 billion, with much more to come. Alderman Brendan Riley says it best: the political short-term gain realized by a long-term asset sale gives administrations more budgetary breathing room. But in exchange for that short-term gain, taxpayers typically lose badly over the course of these deals. There's another angle. The same Citra-Macquarie partnership that bought Chicago Skyway also bought Indiana's toll road for $3.8 billion. The deal went bankrupt. They sold it at a loss. This is the infrastructure investment game. Buy assets when others are desperate. Flip them when times are good. Hold on to the best ones forever. Conclusion. Every day, tens of thousands of cars cross the Chicago Skyway. Each one pays $5.90. That's $350,000 daily. $127 million annually, all flowing to foreign investors. 82 years to go. By then, your great-grandchildren will be paying tolls on a highway their great-great-grandparents built. Was it a good deal or a bad deal? It made money for private investors. It helped Chicago through a crisis. It demonstrated the power and peril of privatization. The Chicago Skyway, America's first privatized highway, a cautionary tale about selling the future to fix the present. A reminder that in the world of infrastructure investing, someone always wins big. The question is, who? Next time your city wants to privatize assets, ask them this. In 100 years, who will still be collecting the checks? Who says luxury travel has to cost a fortune? Discovering Travel Bliss reveals the secrets to experiencing 5-star treatment without the 5-star price tag. Learn how to score upgrades, access exclusive experiences, and indulge in luxury for less. From hidden gem boutique hotels to insider tips for first-class flights, this book is your key to unlocking a world of affordable luxury. Elevate your travel experience without emptying your bank account. Get your copy today.